Hi, my name is Alex Coach with GustanCho.com. I'm going to talk to you about residual income for VA borrowers. So, all VA borrowers have to pass the residual income test. And let me tell you what a residual income test is the best I can. It is what you have left over after the underwriter estimates what you actually have in the bank, after the taxes are paid, after you pay your electric bill, after you go to the grocery store, after you get gas, after you buy your kids some shoes. So they have some kind of formula for a calculation of what you have left over. If you don't have enough money, and there's a chart for what your family size, the region of the country you're in, and you have to have that certain amount of money. The chart has how much money you have to have left over. If you don't have that much money left over after the formula that they use, then you can't close a VA loan. So to dumb it down, if you make little money and you're doing a low loan amount, you're probably going to fail the residual income test. It's because the less money you make compared to someone who makes a lot of money, and the person who's buying through 4 times the size of the house, it doesn't cut into what he has left over, because basic cost of electric and food are all pretty similar, so those are fixed costs. So the less you make, the less likely to have a residual. But if you make a lot of money, the person who's buying a bigger house will still have more money left over after paying electric and gas and food. It's just kind of how you gotta think about it. So if you make a lot of money and you're still high DTI, you're going to have more residual income than a person who makes little money and has maybe a little bit lower DTI, because you have more money left over when you make more money, even though it doesn't make sense. But that's how it kind of works out. So keep in mind that low income people fail residual income tests because the money left over is there's not enough to cover what you need to have. So it's so complicated to explain, but it's something that we can't even tell you. The underwriter has to tell us. They run this the last second to make sure you're still passing it, and sometimes it fails the last second. It's kind of really hard to get residual income up, except for paying off debts or lowering your interest rate by buying it down. Those are 2 ways I know how to get over it. Hopefully those 2 are enough to get you over the hump. But usually the underwriter does the test in the beginning, she'll do it again in the middle, and then they'll do it at the end. So they're keeping running it, and they keep saying on every round of approvals and conditions, they said it still passes. This loan will be good to go as long as it maintains this residual income pass. So that's the last thing they're going to do before they say clear to close. So keep that in mind. Residual income, the less money you make, the harder it is to pass that test. It's something that your loan officer or any loan officer really can't tell you from day one. It's something the underwriter should do right at the end. We can give you a good idea, but we can't tell you for sure. So give me a call if you get any questions, 630-915-7550. Thanks.